All righty, good morning and welcome here to Trade Minute. Great to have you aboard. I'm hopping on here as a bunch of questions have come in. Let's go and take a look at them. Let's talk some of these stocks and go forward here. Let's start with let's see. So I'm just going back through. Let's start with Newmont. Well, let's go with Apple. Okay, let's start with Apple here. And Steve, you were asking here about Apple and this reaction. Okay, I'm just verifying the sound here. I'm being told that sound is not coming in. Sounds good. Audio's fine. All right, great. Great. All right, sounds good. Then let's continue. Okay, so Apple earnings yesterday. Every analyst and their dog came out, upgraded Apple yesterday, and Apple sold off. The earnings report was pretty ho-hum. Wasn't fantastic. The Bears could find holes in it. The Bulls could find, bright spots in it. And selling yesterday, a little pop back up here today, about 2%. With something like this, you're talking about a bearish engulfing on the earnings, and it tends to signal the stock's going lower. So, with it popping up here, you have an option. You can look for a place to short it somewhere in this 530 area, okay? Somewhere in this 530 area. Um, if you get some sort of bearish action, kind of come in there. With it being earnings, I'd like to just let it play out for a few days. But if it breaks back below 520 here, okay, we see Apple break back below 520. That'd be really tempting from a short side standpoint to get short here on Apple. Till then, very difficult to get short, especially with some of the buybacks and some of the other things that are going on there. A little bit tough there. Newmont Mining. I mentioned this morning one of my favorite trades on the board. Was asked how this morning's action affects my opinion there. It keeps it very high. In fact, one of the things that I'd love seeing here, because I'm not entering it just yet, from an hourly perspective, we have this little consolidation going on over the last little bit. To see this thing just kind of flatline here into the Fed, let the 7 hour kind of play catch up, and then start to see this break back up above 28.5 into the close would be as ideal of situation as we could have. And for the candlestick challenge, I would probably go after it. We would have a rising three methods, bullish continuation pattern, and we'd have a great setup after the Fed, and those post-Fed setups tend to be pretty good. And so really like the action here on Newmont. AUY, okay, similar action, a little bit more reboundish as AUY kind of exhausted to the downside yesterday, kind of overreacted. These overreactions in these miners are very common. Okay, if you've never traded the miners before, these type overreactions are all too common, and they can be a little frustrating from time to time. But makes you want to have looser stops. Tight stops with gold miners typically, just serve to stop you out. But even the ABX and the Gold Corp, and you get into like the silver miners with Silver Wheat and SLW or SSRI. There's some really good things that are continuing to go on here. You want to be even more aggressive, get into a little more inexpensive stock. Harmony Gold Mining, kind of curious. Probably get a nice move up above 4 would be pretty strong there. Okay, so gold miners still quite bullish on, and if you look at the silver here, you look at gold, they're both up a couple percent here today, and bodes quite well for them. Bodes quite well for them. The TLT here today down about 2 cents. There, look, there's nothing, and I hate to keep saying this every day, but there's nothing here. There's just not been any catalyst yet. I thought we could get a little bit of catalyst with some of the inflation data, but it hasn't moved the bonds at all. The Fed should be a catalyst. Typically, is a pretty strong catalyst for the TLT. But this is just we'll keep on holding on here, and we're still looking for 110. And depending on what the Fed does and what some of the data is, what the market does, we could see 114, 115 on this. So I'm not, I'm not um, putting those out of the realm of possibilities here. XLE. I mentioned earlier today that wouldn't get out of, or didn't get out of XLE this morning. One of the things that happened, XLE opened up and it was about 35 cents higher. And watching the options on XLE, the put options did not go down. They did by a couple pennies, but they didn't really lose a lot of value. And one of the things that I've just noticed over the life of my trading career is that when a stock makes a move and the options don't follow, there's oftentimes a reversal. And doesn't have to be all the time, but we saw that here this morning, and we saw some of the weakness come into these energy names. Look, it's still too early to say, okay, you know what, all's good to even get more aggressive short on the energy group. But boy, is it tempting. We'll see where these setups are post Fed here today. But man, is it tempting, and to take something like, excuse me, sorry, to take something like, Anadarko, APC. Okay, huge bearish engulfing here. To take something like, sorry, the name just slipped through. EOG, which from a valuation standpoint has just gotten a little bit too high here. To take something even like Baker Hughes, BHI. This will be a little bit more difficult because of the earnings, but you start to see some of these pull back. ConocoPhillips breaking below the 7-day moving average here. A lot of these energy names have negative divergences going on with them, with a lot of the different indicators. And then oil. I mean, oil continues to be in a downtrend. And, if we start to see oil breaking below 96 and 95, that's really going to catalyze a strong sell here in the XLE itself. Okay, so a lot of stuff there. The small cap, some of the small cap energy names could be very interesting. Take a look at Rosetta. Okay, Rosetta Resources here. Potential gravestone candle coming in here today. Now, as far as the price action, am I sure that it was at 65 earlier today? We want to double check all that because of some of the price issues that have been in the market today. But even some of these small cap oil stocks, could be in a little bit of trouble here. Yeah, AK Exxon looks strong. I mean, Exxon here, big picture, not one of the stronger energy names. Short term, yes. Short term, yes. And I would much rather be short XLE than short Exxon itself or Chevron itself. But in this whole group, some of these refiners that have been bouncing on low volume, or pushing right back up to resistance levels, they could be interesting. My favorite way to play the whole energy group isn't a specific energy name. It really is just with the XLE, and maybe depending on the action here today, the OIH. OIH puts bearish engulfing on it today. It's just classic get short and go type action. So we'll see how that plays out. Nothing that I can react to right here, right now. I would think about reacting to one of them if I didn't already have some XLE, but to say, hey, let's get in right here, we'll give it a bit. Okay. Steve, sorry, I'm just going back. Steve, you say, Jeff, I'm not seeing something on XLE, a breakout, a confirmed retest, a breakout, trading above 7 RSI rising. Could you make a case for bullish outlook? Absolutely, you can. Absolutely, you can make a bullish case. Okay. And with anything technical, okay, and with technical analysis, you can make a bullish case or a bearish case. You mentioned three white soldiers. I'll put a little hole in that argument simply because three white soldiers is a reversal pattern that happens after a downward trend, and the XLE just hasn't been in a downward trend. Okay, so to call this action here recently any kind of three white soldiers action, no, that's a pretty weak argument. But we're not severely overbought on the XLE. You do have some resistance from a trend standpoint coming in. And XLE really, continues to hold above 87 for a few days. That's very bullish here. Okay, that's extremely bullish if it continues to hold above 87. So far, so far, it's continuing to have some of that resistance there, and with that level. Yeah, RRC reported good numbers. UPL reports Friday. UPL worth a lotto ticket. I haven't gone through the RRC numbers yet here. The reaction has been pretty volatile. For me, RRC is just consolidating. From a long-term standpoint, there's a major consolidation going on here in RRC. If I pull up the weekly chart, we're not talking about any real movement overall. With UPL, we are talking a little bit differently. We're talking about a major breakdown going on here. Okay, a major breakdown happening there. I mean, I'd have trouble putting a lotto ticket on UPL, but just because I don't follow it extremely close. But from a technical standpoint, I mean, there's absolutely nothing bullish there. I'd rather put a lotto ticket on something like EOG. It's been on a big uptrend. It may have a correction, but then you're going against the whole trend mentality, right? You're trading against the trend. But generally, with lotto tickets, I like to go against the trend, but that's just personal preference. Steve, are we playing the oil downtrend? No, I mean, when we got into XLE, and let me kind of go back to it here. One of the things, take a look at the oil downtrend since September. Okay, so a small oil downtrend, and then the XLE doing the opposite since here October. Okay, we have oil going the opposite direction of XLE. That's not entirely uncommon. It happens, but it's happening with a little bit of enthusiasm in the market, should I say? A little bit of potentially over enthusiasm in the market, and where we're having the underlying erode. With the actual price of oil, okay, when you start talking about oil trading above 100, okay, well, if it goes from 107 to 102, that's not going to affect a lot of the oil stock earnings too much. Okay, it's not going to have a major effect. But when you're talking about breaking 100 and potentially going to 92, now you're talking about a fundamental effect. You're talking about a real earnings hit. You're talking about production shifts. You're talking about a lot of change going on. Okay? And so you'll notice here what's happened to a bunch of the coal stocks as oil's been going down. A bunch of the coal stocks have been boosting up. Why? Some rotation there. So oil doesn't necessarily, or the downshift in oil doesn't necessarily mean the XLE has to go down. But we start to see oil breaking the 96, 95 and getting even into the low 90s. You're talking about fundamental players, fund managers, holders of these stocks now having to look at them and say, you know what? Is Halliburton really worth, $50 with oil at 90? Okay, is it really worth $50 with oil at 90? There's a fundamental question that comes into play here. With oil trading above 100, it's fluctuated between 100 and 110, kind of like it was, through July, August, September. That's not much of a question. There's nothing really, who cares? But with oil breaking 90, showing signs of going to the low 90s, yeah, there's a lot of questions there. Um, Jeff, can you tell Tesla this grind lower is killing me with the decay? Yeah, welcome to trading in the high flyers, and if you're out of the money at all, any type of only 2% moves a day is going to be killer. 2% moves if you're out of the money, they're painful. Okay, they're painful. One of the reasons I tend to want to get a little bit into the money, but at the same time, you can wake up at Tesla's at 120 in 3 weeks, and who cares about the time decay, right? But if you're watching it on a hourly basis or minute basis, yeah, you absolutely see that come in. Netflix. So Netflix, real strong bearish action on Monday. Yesterday, starts off, goes down, comes all the way back up as the market rallies. But look at the volume. No real volume there, okay? And that's what you want to see. Now Netflix up here around 325. For those of you that want to get aggressive and play something that could fall, 75, 80 bucks. The setup here on Netflix is pretty good. I wouldn't do it with a stop. Okay, I just wouldn't do Netflix with a stop. I would only put in what you're willing to lose, and hold it more as a gamble there than as a strong risk reward type of a setup here. Baidu really coming off its highs, and some big volumes coming in here. It just kind of, as I look at this group, we've talked bullish on it for quite a while now. Now with the Sohu miss, the action on Kihu, the action on Baidu, the action on Sina, it's a group where I'm actually looking at it and saying, you know what, we have some strong potential where we need to be looking at these stocks from the bearish standpoint instead of the bullish standpoint here, as we have some major divergences going on, some topping patterns forming, nothing majorly confirmed, but some trouble in the water here, and makes me say, all right, let's go from looking at it from a bullish perspective to looking at it from a bearish perspective. Yeah, Steve. Yeah, I mean, Sohu had a pretty ugly report. Okay, it had a pretty ugly report. We saw CYOU. Okay, big gap down on Monday. Okay, so we've had some bad reports there. Baidu's report was pretty good, but you're not getting the follow through buying here. Okay, with that. Yeah, Vaughn, our XLEs are November expiration. Do I have a target to trade in? You know, this one I'm talking about, with XLE, with it being a candlestick pattern. I probably should be out here today, and I'm going to break that rule and hold it longer. Yes, the time decay will come in, but at the same time, we get the $2.50 to $3 pullback. That's not going to matter. I really, we're not really going to see time decay really kick in until not next week, but the week after. That's when we'll really see time decay kick in. So it's nothing that we really have to be worried about. Yeah, Steve. As far as general fraud on these earnings here for these internet stocks, general fraud and fraud accusations among the China names has been there for 10 years. 2006, there was a big talk of fraud in these names. 2007, when we had the Shanghai swoon, there was talk of big fraud in these names. It constantly comes out. They don't have the same SEC scrutiny that many of the U.S. companies have, and so even trusting the earnings reports is a little bit difficult to go after there. Jaywood, great question. How come we didn't get out at our original stop of 86.50 on the XLE? Good question. And 86.50, and when we made this trade, there are some trades that when we make, I say, hey, we're talking a hard stop. There's other trades like with Starbucks, right? We said, hey, you know what? This thing goes above 79.40. We're out. Yesterday, 79.40. All right, enough. Okay. With XLE, we're talking about a candlestick pattern that doesn't have a hard stop point. Okay, just doesn't have a real hard stop point because of this abandoned nature here, and we're shorting into a market that's bleeding higher. And so as it hit 86.50, it's still at resistance. You could argue we probably should have gotten out yesterday. Okay, but this is just one that the more I watch it and I watch the price action and the volumes on it, it's one that I said, you know what, instead of following that stop exactly, I'm going to continue to hold. The delta went down quite a bit, so the risk of losing more shrunk, and it was just a decision that I made to say, you know what, given what's going on, I think there's a really good chance of a reversal happening, and so we'll go with that. Yeah, Jaywood, most candlestick patterns have hard stops. With some of the engulfings, in fact, almost every candlestick pattern has a hard stop. The hard stop on this type of a pattern where you have the island reversal, the hard stop technically is at the top of the island reversal. Okay, so that would be, about 87.50, somewhere in that area, 87.60, where we kind of went up and hit right away this morning. Okay, but the rest of them, yes, and there are hard stops. And if you go back through some of those videos on the candlesticks, I talk about where the hard stop points are, and I'll keep doing that as well going forward. We're seeing XLE underperform pretty good here today. Yeah, no problem, Jaywood. Yeah, AK, still bearish on Tesla, absolutely, or Trina, absolutely. In fact, the price action in solar here today, this is fantastic for those looking to be short solar. It's had its small bounce, right? It closes down near these lows. We get this side-by-side action. Very bearish here for Trina Solar. Here's the solar ETF. Okay, so we get the overextension down, the 3 black crows down. We get the low volume rebound back up to the 7, and pushing lower there. First Solar not trading in the same type of a wave. It's something like Solar City, breaking down a little bit here. But, CSIQ, Canadian Solar, doesn't have a vibe bear signal, but, not able to push back above the 7. Look at the volumes on here. There are a lot of topping arguments here for solar. And, for, TSL as far as being one of the most bearish of the bunch there. Aaron. Yeah, it's not working yet, right? I mean, it's not working yet, but we still need a ways to go there. But yeah, anyway. Interesting stock out there, IBM. Okay, we're talking earnings. It's coming up. It's filling the gap here with IBM. If we start to see a rotation from the small caps to the large caps, and we've seen the small caps underperform the large caps. In fact, they're doing so today in a big way. They've done it over the last about week and a half, as Jill pointed out for us earlier today. If we continue to see some of the weakness come into the small caps, you'll probably start to see a little bit more rotation come back into things like IBM. where they will become a little bit more popular. And where IBM, when the market's down, you won't see IBM underperforming and leading it down. You'll actually see IBM outperforming most of the large caps that are out there. I would expect to see that from IBM and GE. If we continue to see some of the erosion there, a little bit of flight to safety there. St. Jude here, okay, trend rider bear, bull pushing up. This is going to be a little bit subject to the market overall. Still in a very bullish position. A lot of those options were $60 strikes that we had looked at a while ago, where a lot of that volume was. Today, nothing worth reacting to. Right here. Yeah, Max, and as far as the Fed here after the market or during today, I don't expect any surprises from the Fed. I don't think the market is expecting any sort of surprise. I think everyone's expecting basically Fed's going to say no timetable for tapering, and economic data is getting a little bit worse. They need to keep their eye on it, and they're going to talk about or bring up the possibility of further easing measures. I think that's one of the things that we will see in this is that they will talk about other easing aspects, and the market reaction will be very interesting. Last Fed report, we had market reacted strongly to the upside, exhausted, and then fell. We've had different reactions. But overall, I don't expect that the market's going to get caught off guard by what the Fed says here, and I think the reaction will be very telling. Yeah, IEP, Icon Enterprises. Yeah, I mean I don't see anything technical in this type of a trade here. You're talking about something that trades on very light volume. I mean, you're averaging 50,000 shares traded a day. So to say, hey, there's anything tradable about this, very difficult. This is more of an investor type stock to me. You do have a little bit of a bearish engulfing the other day, and now trading right in between that. So you can say, well, if IEP breaks above 107, that's very bullish. If it breaks below 96, that's very bearish. But is it? I mean, with so few shares really traded, it's tough to kind of make that sort of assertion there. Yeah, Max, your temptation with Vegas Sands, I hear you. Absolutely hear you. These types of patterns are fantastic. These are the types of patterns that tend to have follow through, where they've broken the 7. Okay, they've broken the 7. They've traded below the 7 for several days. They get a low volume bounce above the 7 and then fail. And they fail at that point. They are very, very tempting trades. They tend to have a lot of follow through. And from an hourly perspective, they tend to look like this. They tend to hit the upper band, find resistance there, go back, break below the 7 and 20-hour moving averages as they go and set a new short-term low. So we're seeing that in Vegas Sands. We're seeing that here a little bit in Wynn. MGM, which triggered a trend rider bear last week, here has done the same thing. Gap up into the upper band, now trading below the 7, trading below the 20. Now these things hold here. They're fantastic shorts. They're fantastic short opportunities. How much follow through, how much run do you get? That'll depend on the broader market itself, but we'll see. Yeah, JBL here. It was kind of an ugly move yesterday, wasn't it? JBL is not a stock that I've ever traded live. I've paper traded a couple times, but it's not one I've ever traded live. But it's a fun one to follow. You kind of get into this group. You're talking about a little resistance coming in overall for the broader group. But JBL here, it comes down to follow through. Is it going to have follow through? It has a bearish signal. It has negative divergence. It's one of the few stocks out there where the MACD is actually trading below 0 and the MACD is crossing down. And MACDs that trade below 0 with MACDs crossing down, Those are extremely bearish signals, and it's having it. It's a potential trend rider bear here today. So it's just a matter of, okay, you know what? If this market continues to trickle higher, it will push higher. But so far, the market hasn't broken yet. As far as, fresh signals out there, and Carl will talk about these a little bit more. Trend rider bear signals coming in here to this market. Here's the list. We have Trina Solar, Shutterstock, DBA. This is the agriculture. And the whole DBA thing, the ag stocks, we've seen some of the earnings come out. Take a look at Potash. Had that earnings reaction to the downside, hasn't been able to bounce back above the 7. That becomes very interesting to potentially short. Mosaic, not as great as far as a short signal. We just have too much mixture within the group to say, hey, let's run after some of these ag stocks. Now Monsanto, very interesting breakdown. We had the little spinning top confirmation yesterday, continuing to push lower. Yeah, fuel, Rocket Fuel Inc. Huh? Yeah, I have to admit I've never pulled this one up. Don't know that the chart tells you anything on that, right? Sounds like a fun company to go and figure out what they're doing. Are they doing something with space exploration? Some of the privatization of the space exploration? Let's see here. No, advertising agencies? Really? Okay. So I'm way off there, huh? All right, so advertising. Great. They call an advertising company Rocket Fuel. All right, interesting. Love it. Love it. Okay. It's the next big thing. Yep. Next big thing, right? Next big thing. Oh, this V action right here. It's really tough with some of these IPOs, especially in the small cap. Like Control. Talked about Control a long time ago when they IPO'd. It was really tough to understand. Okay, where's this thing likely going to end? And I typically will want to wait. About 6 months before saying, you know what, I can rely on the technicals to tell me anything with this stock, and you can get all types of action depending on each individual scenario and each individual situation there. Was asked about Triple D here this morning, the 3D printer. They had earnings yesterday, and Triple D lowered their earnings guidance going forward. Still pretty good earnings guidance. We're still talking about a really good growth stock, but they lowered their earnings guidance. That's why it weakened, and then it was bought up pretty well, even on that weakened earnings guidance. That bodes very well for Triple D. Very well for Triple D overall. Don't know that I buy it right here, right now, but as far as for that stock going forward, SSYS in that group, a very nice breakout here today. Bodes pretty well with these some of these 3D printers. Alrighty, so as far as market goes, we are seeing some movement here with pre-Fed. We've talked about how most of these Fed meetings, we've actually seen the movement go to the upside. Here we're seeing some downside movement. Granted, we're only 10 points off the overnight highs, and market's only down 5 points. It's not down that much, but it's first time that we've really seen any kind of selling. Is some of that selling because of some of the mix up with some of the price dissemination in the market? Maybe. But we'll kind of see there. Yeah, BMRN. Pull it up here. In a pretty strong breakdown. It's a bio, pharma stock, and these can be a little tough to to say, all right, you know what, this is the price target or anything like that. But we've seen some of the money come out of some of these pharmas over the last month. We've had a couple companies that have had some failed trials and whatnot. But but then you look at some of the bigger pharmas, the Bristol Myers of the world and whatnot, and they're doing all right. So these pharmas are typically individual stories, and that's some ugly selling that's happening. And a lot of times with pharmas, once there's a trend reversal, you'll get the trend continue. Just be real careful about when the next date is of any sort of announcement and any sort of drug trial announcement by the FDA or anything like that. I knew you'd chime in there, Steve. Yeah, Guild, JLD, nice little gap up here this morning. They continue to hold up pretty well. For me, I don't follow these tremendously. Teva I follow a little bit, but you're seeing a gap down here today on Teva, but in general, they could be they're interesting. There's a lot more fundamental research that goes with them. Yeah, Disney. Are we talking about a bearish breakdown? Look, Jaywood, to me, Disney, and look, I'm bullish on Disney long term. I think the company is doing a lot of great things. Um, there's growth all over the place with it. But it broke out above 68 here. Okay, this is 67.5, 68's been the resistance all year. And it broke out. And it broke out on no volume, which is so rare to see. And when you see it, it's tough to trust because once it breaks back down, it can sell hard. And, we saw the spinning doji on Disney last week. Okay, we've had the bearish confirmation. Today breaking the 7. It's not been on aggressive selling volume or buying volume. But I think the fact that Disney broke out on no volume, what it tells me is that this isn't fund managers buying Disney. This is Disney buying its own stock. And those moves typically aren't sustainable. And so it makes me a little nervous about Disney overall. I'd struggle to be long it. They do have enough of a buyback in place to keep it going up if the market goes up. I mean, the breakout here from a price target standpoint, you're talking about $73 to $75 as far as a breakout target. So, yeah, that's kind of where Disney is. Look, I sold some calls on some of the Disney stock that I own. I've mentioned I own some for my daughter. I sold some calls on it, but no, we'll see. Okay, all right. You're holding the common stocks. I wanted to play this over the next year, so seems good. But play by me buy and hold. Yeah, I mean, if you're looking at a buy and hold stock, I think Disney's one of the better ones out there overall. Again, I'm no financial advisor, long term advisor there, but it's look, yeah, you have the fundamentals in place, you have the growth factors in place. Uh, you know, Market crashes or goes down big, Disney's obviously going to go down, but it's not that big a deal. Yeah, Cigna breaking back above the 7. Does the fact that it's breaking above the 7 change my outlook? No, not at all. Does it change some of the risk reward factor? Yeah, I mean, there's nothing magical about the 7. The 7 isn't this like, okay, we go above the 7, it has to go up. We go below the 7, it has to go down. It's a good target place to kind of understand your risk. And Cigna here is very much like XLE. You have the bearish breakdown. You have the bearish confirmed breakdown here in the middle of October. Now you're getting a little bit of a bear flag action that with a little bit of a jump up could turn into a bullish bottom, a bullish breakaway. Uh, and so you have to ask yourself, if you're going to short this, how long do you want to let it bleed? To what level do you want to let it bleed higher? Is it done? Has it had its ABC correction? Um, this is a stock I would have a difficult time entering here. It'd be something where I'm looking for a bearish candle to come in. So, if we start to see some sort of bearish engulfing, dark clouds, something like that, or some sort of kicking action where it gaps down $1 tomorrow morning, go after that. Max, great, great. Yeah, my daughter, she's 6, and yeah, she'll sit down, she'll look at a chart with me, and I ask her, all right, which way is this going, and she'll comment. It's quite funny, but I don't think she understands the concept of of stocks, right? Sounds good, Jay Wood. Good deal. Um, no, I didn't mention Shutterfly, but let's go take a look here. SFLY. Sorry, I let's see here. Here we go. Shutterfly. Obviously, the earnings event here today. Uh, I haven't gone through it. My expectation is that they had some lowered earnings guidance, and with the earnings guidance here being lowered, that tends to be a negative factor. I'm not quite sure how much it was lowered. Let's go see if we can find that right here. Um, they beat on revenue. Outlook disappoints. Okay, yep. So it wasn't a bad loss. They beat on their revenue, but their outlook, company, most earnings reactions come down to the outlook. So let's see, revenue jumped 25%. Analysts expect a revenue of 118 future fourth quarter growth. Earnings per share between 95 cents and $1.11, when analysts were expecting $1.45 a share. Ouch. Most earnings downgrades that you see are, 3 to 5%. But to go from $1.45 down to $1, you're talking about a 30% haircut in future earnings expectations or future revenue expectations. Ugh, that's ugly. That's real ugly. And you're talking about a stock. When we just look at a pure valuation number, forward PE of 107. That's up in LinkedIn range. We're talking about a major growth stock, major growth stock, and now lowering their earnings guidance going forward. This is a sell any rally type of a stock here. Um, this is absolutely a sell any type of a rally going forward with Shutterfly here, and that'll probably be the case until they have their next uh, their next earnings. Yeah, no worries, Steve. Yeah, I have no problem talking about it with Shutterfly. But yeah, I mean, for those of you who don't like going through earnings reports and things like that, but you kind of want a little bit of a clue of what's happening, it really just comes down to outlook. You know, who cares what they did the last 3 months? The market's looking forward. So who cares? Yeah, maybe you missed, fine. But what's the outlook going forward? And if you're trading at 100 forward PE and you cut your earnings outlook going forward, your stock's going to get smashed. LinkedIn, Shutterfly, two great examples of that here today. And doesn't mean that it's going down. It doesn't mean that LinkedIn is going from 230 down to 200 today. I mean, you may see LinkedIn hit 250 or 240 first. But what it says is the stock is now shifting from a buy the dip to a sell the rally type of a mode there. You had GE that kind of did the opposite here, with their earnings. They had some pretty good earnings. It's almost a buy the dip type of a thing. Boeing, it continues to be a more of a buy the dip now because of their earnings. Honeywell continues to be a buy the dip. Type of an aspect. I'm very interested in Starbucks earnings after the bell here today. This is something that has been, buy the dip, buy the dip, buy the dip, and we're talking about valuations that you can argue are getting a little bit stretched. Nowhere to the point of LinkedIn or anything like that. You're talking about a forward PE of about 30. Okay, with about 20% growth, you're talking about stretched valuations here, but one that nowhere near LinkedIn and Yelp and Shutterfly and any of those. All right, so market kind of still sitting down here near its lows. As we kind of head into the Fed here today. XLE is a little off its lows by about 30 cents. We'll see. I don't think there's anything to really get too reactional with at this point ahead of the Fed. Um, be very curious of the transports, the railroads, and the small caps. After the Fed here, we see those things continue to weaken, and we'll have some pretty strong bearish setups into the close. But all that said, to see the market fly up 25, 30 points here after the Fed today, not out of the realm of possibilities. Okay. All right, well, thanks for hopping on, and I will be back on here in about 3 minutes to talk candlesticks. Talk to you soon.